Hello everyone and welcome to the Property Podcast. It's episode 201. I'm Rob B with Rob D. And this week we give away our secrets and we're going to tell you exactly where to invest in 2017.
Yes, we are. Which street, which number on that street, all that detail in this episode. No, not really. We're just going to give you some broader areas than that. But it's a question that comes up absolutely all the time. Everyone seems to want to know where to invest, especially people who have been priced out of the southeast. They know that they need to go out of the southeast. I don't think I'm going to shock anyone when I say that all of the areas we mentioned are going to be outside the southeast. So they know that they need to go somewhere else, but where? Well, that is what we're going to be shedding some light on in this episode. We've got 5 areas for you, and we've got some wildcards as well.
We have indeed, but before we get there, the regulars know what's next. It's our news story of the week, Rob.
It is, and this is one that I've dug out of City AM, and the headline is Rents Are Hitting an Affordability Ceiling. I chose this news story because it backs up something that I wrote about recently, and you know how much we like being proven right. The story here is that rents last year, 2016, increased by 1.7% over the year, which is down from 3.8% the previous year. And the idea is that the rents are hitting a point where they can't get any higher because people can't afford them. And the reason that I think this is important, and obviously this is massively regionally driven, it doesn't get down into the regional breakdown, but you will find that this is a big issue in London and not so much of an issue in many other places. So as an investor, it doesn't concern me, but I think it is something to be mindful of, because every time anything happens, it's always like, oh, well, it's just going to push up rents. And it's like, well, my thing's always been, you can't keep on pushing up rents. They can't just go up forever because they are tied to incomes. And there hasn't been any meaningful wage inflation for a decade. Therefore, if rents keep going up faster than wages, you eventually hit a point where everyone is paying as much as they can physically pay in rent. They cannot pay anymore. And therefore, putting up the rents will only mean voids. And I think that we're at that point in London. And in this article, it quotes something that I've mentioned before as well, which is that some Londoners are spending 75% of their disposable income on rent. And when it gets to that point, rents aren't going to go any further until you've got some wage inflation. So it's another reason as well, just so I can fit a little London dig in there, that London prices, capital values can't go that much further, in my opinion, because they just won't be supported by rents, which means that yields are going to fall even further and get to the point where they are now, which is, I think, where even the most staunch person who wants to invest in their own backyard just can't make the numbers work. So I like this news story because it gave me an excuse for a rant and it backed up something I've been saying. So it doesn't get much better than that.
And a London bash, love it.
Oh yeah, the trifecta there.
Interestingly though, Foxtons this week released a profits warning, which will come no surprise to many because of the potential changes to how they can charge rental fees, which we talked about before on the podcast, but also the slowing down of certainly the prime London market and possibly beyond. But that's an early warning. Most of the data we get on property is lagged, so it's a few months behind. But Foxtons are in it right now. They know what's happening in the market like all the other agents are. So if Foxtons are putting out profits warnings now, and Foxtons pretty much exclusively operate within London and the southeast, but predominantly London, then that suggests that they're not very confident about the London market right now. We've predicted this last week. We'll see if it comes true. We're only in middle of January, so it's a little early to say we were completely right, but it's certainly another indication that it's heading that way.
Also worth a mention, I think, is just I was looking through some news stories this morning to decide what to put into this episode. Worth reading out a few headlines. Foxtons shares slump after significant fall in London property sales. Calm before the property storm? ? Property returns expected to plunge this year. We were just saying the other week about how there's going to be a lot of media negativity this year. I think we're starting to see it already.
But this is weirdly where you should get excited because you expect it. If you haven't listened to the episodes on the 18-year property cycle, we've done multiple now, and we've talked about it in some depth elsewhere as well. But the point is, when you get to that mid-cycle wobble, one of the key indicators that you're there is when the media gets negative, and it could be, it might be just a bad week, but it could be that it's starting to turn that way. Again, we've been saying it's about to happen, and for those who did summits with us last year, I said it hasn't happened yet, but the next thing I expect to happen, or we expect to happen, is that the media goes negative. And it looks like it could just be happening, which excites me because it's going to put people off and we know exactly where we are.
Yep, good news for people who like bad news. And I do like a bit of bad news in the right context when it comes to investment anyway. One bit of good news, and I'm not going to plug the Property Geek podcast every week. I mentioned it last week. I'm going to mention it for I was about to say the last time. I'm not going to commit to that. But for a few weeks at least, I thought I'd give the Property Geek podcast a quick plug in case you missed the fact that it is back. And the episode last week was about the new mortgage rules that have come into effect, which haven't actually had that much coverage, but they are definitely something you need to know about. And I've got loads of really nice emails off the back of this episode from people who found it super useful and it really cleared up a lot of things for them. So if you're not subscribing to the Property Geek podcast as well as the Property Podcast, then okay, you can sort that out. But in the meantime, there'll be a link to that episode in the show notes, which this week are at thepropertyhub.net/where to invest 2017.
I don't think you should feel guilty about plugging free education, Rob. If you were selling some expensive course, then we might all feel a bit uncomfortable here. But free education, I think you're entitled to plug. I think you are anyway, and it is our podcast, so it's okay. Right?
Yeah. I'm also selling my car. If anyone wants to buy it, no, that's it. Okay, let's get on to our topic of the week before I get tempted to pitch anything else.
Yeah, I think we'd best do that. Okay, so this week, it's a subject we love talking about. You take us to a meetup, and one of the questions that always comes up is where to invest this year. Where should I invest? Where should I invest? Now, that's actually a pretty poor question because it's going to depend on what you're trying to achieve, what your goals are, what your timeframes are, what your tolerance to risks are, what things will you accept and won't you. However, regardless of all those caveats we give, people still want to know. So we will tell you the places that have got our attention, the places that we're actively looking at, whether through business, for development, for our own investments, or for the companies. As I say, these are the areas that we are literally looking at non-stop, where we've got multiple Rightmove links and searches set up where we're looking at them daily. Yes, we're pretty obsessed. So we thought, you know what? Let's tell everyone what we're doing.
Okay, well, let's kick this off. And Rob, your first one is a place that you've mentioned a couple of times in the past, but with good reason. This is a good one. It
is, and I think I'm going to annoy a few people when I talk about this one, because I've told a few people now, and they get really excited when I've told them, offline, privately, and like they're straight on Rightmove, getting excited, thanking me that I've given them some secret. And this place is Stockport. So they're going to be angry now because I'm literally broadcasting it as the first place that people want to look at this year. But Stockport, for those who don't know where it is just outside central Manchester. Manchester, we've talked about multiple times, definitely will get the headlines this year. We've talked about that last week, rightly so. But there is value in other places as well. Stockport will do exceptionally well off the back of Manchester. The proximity is very close. The train is 8 to 10 minutes, I think, something like that, direct into Manchester. There's a brand new road that's just opened, which links it to Manchester city centre and to the airport, very close to the airport as well. It's on the main line for going direct into London as well. So all the fundamentals are there. If you told me 10 years ago that I'd be plugging Stockport as the first place to look in 2017, then I would have laughed and laughed and laughed for about an hour. Because, let's face it, Stockport 10 plus years ago wasn't the prettiest of places. And some may say, I think a little harshly, that it isn't now. But I tell you what, it will be. It's getting so much money put into the area, £1 billion alone in that particular area. And with all the billions that are going into Manchester, this is one that, if you're looking in Manchester city centre, and you probably should, look in tangent with that as Stockport as a balance to the portfolio. We're going to give you others just like Stockport, so don't worry, you don't only have to invest there this year, but I think it puts us off to a strong start, Rob.
Yeah, definitely. Loads and loads of investment, small area. I think you can see what's going to happen next. Speaking of big investment, Liverpool is another place that had huge investment with the capital of culture quite a while ago now, but that was another of those places. And Rob, I've got to be careful here, but I think you'd probably agree that it wasn't the most attractive of places city centre wise in the past, but the investment that went in with the docks and the waterfront and everything else is amazing. It's a lovely place. I've been there for pleasure recently, which is something you probably wouldn't have done 15 years ago necessarily. And yes, that's a long time ago now, but investment is still going on. And it's one of those places where it seems to be lagging a little bit in the property cycle. So Manchester, we've talked about a lot recently. That's sort of leading the charge. Liverpool is maybe a couple of years behind that. It's not an outlier. It's not a risky one. It's a safe bet, but it hasn't started to have that aggressive growth yet. And it is starting to become more popular if you just go by the barometer of emails I've received and conversations I've had. It's really interesting when you're in the position that we're in, where you are sort of hearing from a lot of people. You see these trends rise and fall, and Liverpool is one that wasn't really anything I was hearing about a year ago, but it's something that a lot of people are turning to recently. I think because they're seeing that it's got a lot going for it, but the prices are still not as high as certain other cities that you could be investing in. We've got some stock there for yellow lettings. Whenever they come up, they always rent really quickly to really good quality tenants. So the market is there. Investment is still going in, and there seems to be a fair bit of upside there. So Stockport might have sent a few people scrambling for their map to find out where it is. Liverpool is not one like that, but there's still a lot of potential there, I think.
Oh, massively so. I think we had to give Rob Liverpool, otherwise this would have been a 4-hour-long podcast through pure bias. But I completely agree with everything Rob said. Just behind the cycle, Liverpool's definitely one to watch for that reason. As Rob points out, Stockport, you might not know where that is, but Liverpool, it gives you the big city comfort if that's what you like, but also with the big potential upside as well. Just like that, though, I feel Leeds is sort of in the same bracket. Leeds, why is it not getting the attention? Very, affluent city, all the fundamentals you want, loads going for it, but just hasn't had the attention yet and hasn't had the uplift of some of the other regions yet as well. Talked about this before, Manchester pushing forward the north, but I think Leeds and Liverpool, I wouldn't be surprised if you've seen good growth there this year, but then really kicking on beyond that. And yes, you have to be a little bit braver than going into Manchester, because Manchester's now moving, so it's easy to invest in an area that's already moving. But Liverpool and Leeds, definitely keep an eye on. So Leeds I'd add to that for pretty much the same reasons, Rob. Universities, all the fundamentals, same part of the cycle, big city, loads going for it, great rental demand, ticks all the boxes.
And as Stockport is to Manchester, maybe Bradford is to Leeds. It's somewhere I know that you've been looking at a lot. It's another of those places where it's either like, where is it? Or you've got some kind of negative association with it. But it seems like quite a similar relationship in terms of sort of satellite town to a bigger city and investment going in.
Absolutely. Again, Bradford behind Leeds in the cycle, but it's so cheap right now, and the returns are so good, and the money that's going in as well just means that I'm really comfortable getting in early. I invested last year personally, and I know many of our RMP property clients did too. Rightly so. Have a look at Bradford. Is a key point, though, with all these places, is if they are a little earlier in the cycle, go to the best areas. Don't go to, Stockport, where's the cheapest place in Stockport? Or Bradford, where's the cheapest place in Bradford? These places are so good for value for money right now. You should be looking to get in the best areas of these towns and cities while the value is still there, because these are the places that will do best. And eventually, long way into the future, but eventually when we have a dip, they'll also be the most resilient as well in any dips in the future as well. So little tip to be aware of. But yes, Bradford, definitely one to watch as well. Another one to watch, and another place I got in really early was Hull. And Rob, I know you got in really early as well. Hull is one of those areas that, again, a bit like Bradford, not the best reputation, but loads happening. Hull has got loads and loads going for it. And this year is the City of Culture Award. So like Liverpool, when it had the capital of culture, all that money that went in to the area and the regeneration that was sparked from it really started from that year onwards. And really, this is with Hull. It starts now. It's not this year is the pinnacle. This year is the beginning of all the investment, all the momentum it will now gain. And I think Hull still offers a tremendous amount of value. Yellow Lettings, again, has a lot of stock there. Your returns, your yields are really strong. So again, you have to be a little bit braver to go in places like Hull and Bradford, and you have to be patient because they're earlier in the cycle, but you can get in there now for pretty cheap. So take a look.
Yeah, the thing I like about Hull is it's just unfashionable. There's nothing wrong with it. Like, you get some places that are poorly connected for transport, or they don't have a mix of industries. There's like a reason. But with Hull, it seems like it is basically just unfashionable, and that means it's pure upside. Like you say, Rob, there's a very long way to go, but you can start to see it happening at the moment. It's not the kind of place where you're going to go in and you're just going to start sort of making blockbuster returns overnight. But in the long term, it does seem to be all upside, and there's lots going on.
I mean, if you're in London right now and you're going, really? And you can't see Rob's point. Think of the unfashionable places 10 years ago in London. Now they're the trendiest and the ones that have had the biggest growth. So you might have to be a bit braver, but you could get bigger results.
And the last one before we move on to our wildcard selections is Glasgow. So there you go. We mentioned Scotland. Who says we never talk about Scotland on this podcast? And actually, I've been speaking to a few people about Scotland recently, and I've been amazed by the yields that you can get up there. So not in Edinburgh necessarily. I sort of like Edinburgh is the London in this scenario, but there are so many other places in Scotland where the yields just seem absolutely huge. Glasgow is somewhere in between. So it's not got crazy high yields, but it is a big international city with absolutely loads going on that doesn't have the really, really high prices that Edinburgh has. So I had a conversation recently with someone who was investing in Glasgow, and he mentioned a couple of areas. So I, of course, went off and wasted 15 minutes on Rightmove looking into it. And I was really surprised by how strong the rents were, by the quality of the stock, by how quickly things seem to be moving. It seems to be one of those places where, if you get the right location, of course, because location within the city is so much more important than the city itself, assuming you get that right, it seems like somewhere where you should be able to get a strong yield with good tenant demand and some uplift there as well. Because what happens, of course, when a big city starts getting unaffordable, everyone moves across to the next one. And so you could say that Edinburgh, as that starts to get even more expensive, you'll start having companies setting up in Glasgow instead. You'll have people moving across there, and it's got a lot going for it. So that's one that I don't have a huge amount of knowledge about, but just looking at it logically, you can see where the upside is without having to take a big risk to get it.
Okay, Rob, let's go to the wildcards. The places that, if we've mentioned a few places that make you go, really? These are the ones that are probably going to really make you question our knowledge and our expertise. But don't worry, we're not going to just name a place and say you should. We'll give you reasoning. So, Rob, you go first. What are your wildcards for 2017?
Okay, so my first wildcard is a country, just to keep it vague, Northern Ireland. This one annoys me because I saw this coming a couple of years ago and didn't really do anything about it. Pure laziness, really, because I just knew absolutely nothing about it and couldn't really be bothered to do the research. I just ignored it because Northern Ireland had an absolutely massive crash in the financial crisis. I don't know if it was the biggest in the UK, but it must be up there. The average price in 2007 was £215,000. Now it's £123,000. So that's an enormous fall in average prices. So it crashed. It stayed bumping along the bottom for a very long time. And just recently, it seems to have started coming back again. So prices grew 7.8% last year, which is very strong. But clearly there's still a lot of upside, because even if it never gets back to its peak, and the property cycle tells us that it will surpass that peak at one point, but there's still a very, very long way to go. So I still put this in wildcard territory because it's early days and it's not something I know a lot about. But the fact that it did have strong growth last year implies that this isn't something where it's got further to fall and you could be in sort of catch a falling knife territory. It seems like the recovery has started and there's a long way to go.
Yeah, agree. Northern Ireland was one that just seemed obvious in the data, but I didn't have the time or the drive maybe to really investigate it and look into it a little bit more detail. But as you say, Rob, it started to grow, but I agree, there's probably a long way for it to go yet.
Yeah, and my other wildcard, which is true wildcard, is Aberdeen. And this probably isn't one that would actually say it's a good idea to invest in 2017, but one to keep an eye on. It is the only UK city in the last 12 months where prices fell. The only one. So we talk about the property cycle. Aberdeen has a cycle of its own because it's so closely tied to the oil market. So the fact that oil prices fell so sharply over the last couple of years means that a lot of businesses have been laying people off, and that's affected the market, and it's affected confidence in a big way, of course, as well, which is a big component of things. So while everything else was growing, Aberdeen fell 6.5% last year, and rents really fell as well. It's not often that you see rents fall. Now, as I said, I don't think that now is the time to go in. This is not a recommendation to get on a flight to Aberdeen and start buying up everything you can find. It could easily stay where it is. It could easily fall further. But it's just an interesting one to keep an eye on because it is on this kind of bizarre cycle of its own. So you kind of got London, which became decoupled from the cycle. You've got everywhere else, which is, some are a little bit further ahead, some are further behind, but they're all doing the same thing. And Aberdeen up there completely doing its own thing. So it's just an interesting one to look at.
Yeah, it's like the rebel of the UK property market. I agree, Rob. Aberdeen wouldn't be one I'd invest in right now, but it has, like yourself, got my attention. I was looking a few weeks back at the returns, the ROI, and I'd say they're now at a acceptable level, but not an exciting level. So it's when the returns become exciting and it's got the fundamentals that you could possibly take advantage of the opportunity. But yes, watch it in 2017, but maybe not invest.
Okay, Rob, what wildcards have you got for us?
I've got two. They are wildcards because you may be questioning, for those in the south anyway, where are they? For those in the north, you're probably being offended now. Why wouldn't people know where these places are? But the two areas I'd say I definitely would keep an eye on in 2017. I don't think you'll see big growth in 2017, but I think you could get in very early and take advantage of what's coming, is Crewe and Wigan. And for a very similar reason. Both are really going to benefit from HS2. Crewe is really going to be one of the main winners from the whole HS2 project. The line goes up to Birmingham first. 1 year later, it then goes to Crewe. A massive regeneration project to take place from there. And then it's a few years break before it goes up further north from there. Crewe will be the hub, one of the main linchpins of that whole network. So prices are so low right now that it's just one to possibly start looking at now before the prices start moving up. It's well located, lots of nice places around Crewe. Crewe's okay itself, famous for its railways. So it's nice that the fact that Crewe is now being regenerated on the back of railways as well. In fact, Crewe was actually created because of railways, Rob, but I won't go there. And the Railway Museum's very good too. But that's not why you should invest. So Crewe definitely want to watch. And very much so is Wigan. Wigan getting HS2 station. Who's seen that coming? Not me. But that means the transport times from Wigan now to multiple cities across the UK will be slashed. And it already has direct commuter links into Manchester, one of the probably, the leading light of the Northern Powerhouse. So Wigan, again, values are very, very acceptable right now. Good returns as well. But with the commuter links into Manchester, good enough reason to invest right now. But with all this regen coming in and the train line, it's going to make a big impact for the future.
Yeah, I don't know a lot about either of those areas, but I do know that they look very, very cheap. And you can get good returns. And there are loads of places that look very cheap where you can get a good yield, but they're going to stay that way, and it's hard to see where the growth is going to come from. But you've just laid out a very good case for why there could and perhaps should be growth in both of these. So a bit of a having and eating of cake scenario if you get in early, perhaps.
Yeah, definitely. I mean, put it this way, I'll be putting my money where my mouth is. These are areas we are actively looking at, like most of the areas we mentioned, because I believe so strongly in the upside potential.
Okay, so that's our picks for where to invest in 2017. Have you found something useful in there? Maybe got you thinking? If you agree, if you disagree, if you've got places where you're thinking, oh, why did they not mention here? Or why did they mention there? Let us know. We'd love to hear what you think about this as well. So get over to the Property Hub, go to the forum. There'll be a thread for this episode and be really interesting to see what your contributions are. Where are you going to be looking to invest this year? We'd really like to find out.
Yeah, that would be really interesting to get a gauge of where everyone else's interests lie right now. So yeah, please do comment in the thread and we'll keep an eye on it. Okay, Rob, we've got a very interesting resource of the week coming up. And we'll let you know about next week's episode. But before that, first of all, a big thank you to everyone who's left kind messages or emails or tweets or other social media messages regarding our 200th episode last week. Great milestone. Really enjoyed that. But linked to that thank you, we've had a thank you in the form of a review. Of course we have. And this week we are thanking Danny. Danny says, I was introduced to the podcast by a friend 6 weeks ago. He couldn't recommend it enough, so I thought I'd give it a go. Wow, what an amazing show. 6 weeks ago, I'd never heard of it. Now I've binge listened to all the episodes, completed all the property courses on the Property Hub, and attended my first Property Hub meetup. This sounds slightly obsessive, and maybe it is, but Rob and Rob make the property education world seem so fun and accessible. Thank you both for all the work you do and all the effort you put in. I've set goals and now I'm working on my strategy and savings. Rob B, I look forward to working with you at RMP Property in the future. And Rob D, your latest book is going to be my girlfriend's Christmas present again this year. I hope this doesn't get read out before she listens. Thank you, Danny. Well, don't worry, Danny. The surprise was not ruined. But Rob, I hope you didn't get a 1-star review in early January from a disgruntled girlfriend.
And ladies, Danny is now single, if you're interested. I stand by that book, but I don't think I'd be buying it for a partner for Christmas. But hey, if you've got a girlfriend who would happily receive a book about property investment, you've got to keep her there.
You have. Well done. Thank you, Danny. Great review. Now, Rob, I'm a little confused by this next resource of the week. I'm not sure what angle the show's going in. You put Tinder.
I did not put Tinder.
Oh, sorry, I misread it.
I put Tinder for business.
Yes, so you did.
So this is Shapr, shapr.co, not .com. Be careful about that. We'll put the link in the show notes. It's been described as Tinder for business. I wouldn't know. I've been married for a long time. But what it is it's an app that makes networking really easy and painless. So what happens is you link up your LinkedIn profile and you specify some interests. And every day it comes up with 15 people who it thinks you might want to meet based on your interests and your location. You just swipe in one direction if that's someone you want to meet and the other if you don't. And if you both want to meet each other, then it connects you and you can message back and forth in the app about meeting up. So the nice thing about it is it makes networking just feel really non-scary because it just gives you a limited number of quality matches every day. So it's not something you have to be doing all the time. And it's just very low friction. So I am on there. It's not something I use every day, but every so often I'll go and I'll have a look. I'll be very choosy and sort of say no to most people. But then every so often there'll be something, I'd quite like to meet someone who works at that company or is interested in that kind of thing. So if in 2017 you do want to get out there a bit more, it might be an interesting tool to take a look at. So the link to that will be in the show notes, which is thepropertyhub.net/where to invest 2017.
So don't be offended if you do go on it and Rob Dix says no to you. Although, Rob, if I go on it and you say no to me, there might not be a podcast. Looks interesting. It does actually look really interesting. And for those who are in business, it can be a bit of a lonely pursuit at times. So I think that's a really interesting app. So definitely want to check out. Of course, definitely want to check out is next week's podcast. And there's a lot happening this year in 2017 property-wise. A lot that we know is going to happen. There's big changes to affordability ratios on mortgages. Of course, there's tax changes. There's what's happening in the market. There's that negative media that we've talked about as well. So lots to navigate through. Next week, we're going to teach you how to invest in 2017. 2017 could be an awesome year if you get it right. There's real opportunities right now. We talked about this last year in some of the webinars we did for free. But this year really is the first year where that is in full effect and you can take full advantage of what's happening. But you can also be fooled into doing the wrong things or even fooled into not investing at all by the negative media. So next week, we're going to guide you through 2017 so you can take full advantage of it.
Yeah, we've given you where to invest this week and how to invest next week. What more do you want?
And last week, we told you exactly what's going to happen. So I think we could stop the podcast after that.
I think so. Give it a rest for a year. Come back and tell you about 2018. What else do you want? Well, maybe you want a couple of listener questions answered. Well, we've got that for you as well. Ask Rob and Rob will be back on Tuesday. Just before, we're back with the Property Podcast with Where to Invest in 2017 next week. So until we see you for both of those, enjoy your week. Have fun. We'll see you soon. Bye-bye.
Bye-bye.
Thanks for listening to The Property Podcast. For show notes, all our past episodes, and to leave a review, go to thepropertyhub.net/podcast.